My name is Matthew Buckley, folks. My call sign is Wiz, and going forward from today, even if we don't work together, if you bump into me or you see me, you can call me Wiz. Obviously, that's not my God-given name, but I earned that as a call sign in the United States Navy. I'm also the founder and CEO of a financial media company down here in South Florida called Top Gun Options. Real quick, as Reed said, I flew the FA-18 Hornet for the United States Navy for about 15 years. I graduated from the Navy Fighter Weapons School, which many of you know as Top Gun, and during my final 5 years flying fighters for the Navy, I was a bad guy. I flew the adversary aircraft, so our jets were painted like MiG, enemy MiG aircraft, and I was Viper, the bad guy in that movie Top Gun. So that was a great experience, and also did some combat time over southern Iraq. I guess I found that to be boring and decided to head to Wall Street. I taught myself as a young lieutenant in the Navy how to trade equity options, and I applied everything I was learning flying fighter aircraft, having a strategy, employing tactics, managing risk, contingency planning, knowing when to get out of something that's going bad before it gets even worse, because in that world, obviously, you don't get to go home that night if you screw up too badly. Applying all those to trading worked extremely well. It worked so well that I actually popped up on the radar of one of the largest volatility arbitrage firms in the world. You see those big vertical windows there on the left? That's the Chicago Board of Trade, and that's actually Peak 6 Investments. That was our trading floor, and I was the managing director strategy for that firm, a $2.5 billion vol arb firm. Currently, I'm also the chief development officer of a hedge fund. It's a private offering, so if any of you are accredited investors and you're looking for a potential hedge fund, we can talk offline about that. But unfortunately, the government doesn't think you're smart enough to know what you do with your money, so I really can't talk about that, unfortunately. I'm also a Fortune 500 executive consultant. What the hell does that mean? Well, folks, the same methodologies that I apply to my trading, I apply to corporate America and actually the NFL. I worked with Cam Newton up there in Carolina. I worked with Coach Fisher up at the Rams the past couple of years. Same type of thing. Everything that you're going to learn during my session today can be applied to the business world as well. Having a well-defined strategy, contingency planning, taking a look at potential threats, debriefing to get lessons learned, and improving execution. Folks, when you think about it, whether it's trading, whether it's combat, or whether it's life, applying some of these methodologies that I'm going to teach you can only result in good, okay? Because as I said, if we have a bad day in our world, we don't get to go home. I'm going to talk to you about our urgent alert service. I'm going to take a look at a couple trades that on Apple and the S&P 500 that I'm going to look to add to my model portfolio and manage for my traders. I send out email alerts and text alerts whenever I make an adjustment or place a new trade. So we'll talk through that. If I have some time, maybe I'll just look at one on Apple or one on SPX, but we need to look at a hedge, folks, period. Whether it's the volatility index, whether it's SDS, SH, just getting bearish on the S&P 500. As you saw this week, Ms. Yellen threw some cold water on the market with her comments that the market was, market valuations are quite high. And then we have a triple-digit sell-off. Then we get a good question mark jobs report yesterday, and we have a rip-your-face-off rally. This is not the market to be flying around in without an ejection seat. So I'm going to teach you how to place a potential hedge in your portfolio, because if your portfolio is all green or all red on a given day, you're wrong. You're not trading right. If a market's having a rip-your-face-off rally like it did yesterday on Friday, you should have had a couple reds in your portfolio. And those should have been your hedges. Because I guarantee you, Tuesday, Wednesday, when the market turned south on Ms. Yellen's comments, yeah, I had some reds, but I also had some blinding greens in my portfolio, and those were my ejection seats. So I'm going to talk to you about that. I'm going to go, I know my time's limited, about an hour or whenever Reed grabs the hook and pulls me off, but I'm going to walk you through my 7-step trade plan. And here's why I'm going to do this, is because I bump into retail traders. I travel around the globe. Given those speeches, like I said, I'll be in New Hampshire next week, Vegas the week after that, going to Bangkok in a couple weeks, and retail traders always, Wiz, people tell me I need to have a trade plan. Yeah, good idea. Get a trade plan, and they don't even know what the hell that means. I'm going to give you one today for free. Write it down. I'm also going to show you how to manage risk and quantify it. Nobody on this webinar, out of the hundreds of traders on this webinar, unless you're a TGO veteran and you're in one of my services, can you quantify risk? When I ask a retail trader, how risky is that Apple trade you have on? I kind of get a shrug of the shoulders like, I don't know, kind of, maybe, sort of. Not, we will give a number to how risky your trade is, and you're going to know how much you can potentially lose. That risk management matrix I'm going to show you, I'm no genius, man. I copied and pasted it right out of the Navy's operational risk management matrix because, as I said, in combat, we are risking capital. You know what capital we're risking in combat? Human capital, folks. That is the most precious capital we could ever lose. Guess what? In trading, it's actual capital. It's dollars and cents. So it works, and you guys are going to be, you're going to leave here hopefully a lot smarter than when you showed up. All right. I'm also going to talk about SOT. This is how I trade here, Top Gun Options, strategic, operational, tactical, and that's how we win. Top Gun Options, folks, really quick, I'm going to give you the 1 minute background about how I went essentially from the cockpit to the trading pit. I got off active duty late in 2000, was going to be a rich airline pilot working 1 day a month and flying around the globe, right? Well, my first flight for American Airlines out of Dallas, Fort Worth was scheduled for the morning of September 11th, 2001. Talk about luck. I saw the breaking news, plane hit the World Trade Center. I was like, all right, it's got to be an idiot in bad weather or, you know, a small airplane. Saw the big hole, saw it was clear weather, saw the next plane hit, and I knew we were under attack. I knew it. It just instinctively, we were under attack. I raced into my closet, threw my American Airlines uniform out of the way, which I hadn't even worn yet. I grabbed my flight suit, threw it on, and raced out to Naval Air Station Fort Worth, where we ended up getting airborne and flying combat air patrol over the southwest United States, us along with some F-16s from the Texas Air National Guard. So I went from potentially flying in an airliner that day to shooting one down, to potentially shooting down a squadron mate. Most of the guys in my reserve squadron flew for American Airlines. They all lived in Dallas. And so imagine, first of all, being told to shoot down an airliner, let alone one flown by your best friend. Very, very surreal day. A couple days later, I actually intercepted a plane and forced it to land that was flying near the Airborne White House down in Crawford. So in the blink of an eye, I lost everything. I was one of those junior pilots at American Airlines. I got furloughed in the blink of an eye. And furloughed's polite airline speak for laid off, right? I had a wife, I had a young son, and I lost everything in the blink of an eye. And that's when I really threw myself into my trading, man. And I'll be lying if I didn't tell you I felt like Eddie Murphy in Trading Places when these guys tapped me and said, you know what, come up here and essentially run our firm. I'm like, I am an idiot. I have no idea. Well, let's just say when I started at that firm on the left, we had a $150 million firm and 99 employees, and when I left, it was $2.5 billion with 600 employees. And that wasn't me, folks. That was some of the methodologies that you're going to learn about today. So I am Valentine on the right there. What do you need to trade successfully? Here's what I'm going to teach you today. Train. First of all, you need to be trained. Nothing you're getting today you should call education. There is no such thing as financial education. The world is full of educated derelicts. You need to be trained. Fighter pilots are trained. Doctors are trained. Plumbers are trained. You need to be trained to be a trader or an investor, not educated, please. You need a tight plan, which we're going to get into in a couple seconds, and you need to practically apply all of that. I can't sit in a classroom all day reading a book on aerodynamics without running out to the airplane and getting airborne, okay? You got to practically apply what you're learning, and that's what we're going to do here at Top Gun Options. So let's go ahead and get airborne. Grab a piece of paper, grab a pen, or maybe screenshot as we go here, or I'm sure Reed's going to get you out the replay eventually. So here's our methodology that you're going to learn about here at Top Gun Options. Strategic, operational, tactical. Here's how you're supposed to trade, folks. And I'm not saying this because I'm the oracle of knowledge. I'm telling you that all of these procedures that you're going to learn are written in blood. When the F-18 left the factory in St. Louis 25 years ago, the emergency procedure section was probably 2 or 3 pages. Now it's about 50. Why? It's all written in blood. This is written in blood, and this is how you should trade. The average retail trader is very tactical. You wake up, you put on Comedy Central, which I call CNBC, and you say, hey, oh, okay, wow, they're talking about Tesla. Tesla's up. I'm going to buy some Tesla. And a week later, it implodes, and you lose money. So very, very tactical traders. Not here at Top Gun Options, okay? What we're going to do is do the exact opposite of what average retail traders do. I'm going to give you a strategic overview of what's going on in China, Japan, what's going on with the clown car in Europe and Greece, what's going on down in Brazil, not only macroeconomically, folks, but geopolitically and militarily. I'll bet you 8 months ago, many of you couldn't even put a point on a map to where's Crimea, and why are the futures down 600 points? Well, yeah, because Putin invaded Crimea, and now your portfolio is getting shellacked. We knew about that at Topkin Options, and we were hedged for it. After we do a strategic brief, we get operational. We take a look at what's going on in the United States, the recent Fed comments, macroeconomic data, the jobs report, industrial production. What are the futures doing? How are earnings looking? After we do our strategic view, we get an operational brief. Then we can get tactical, folks. And if you didn't learn anything on this webinar today, I hope you, for the rest of your life, if you trade options, you never say the word options strategy again. Not an iron condor, a bull put spread, a covered call is not an option strategy, folks. That is a tactic. A strategy is saving for college, saving for retirement, buying a boat in 6 months, managing risk. Those are strategies, folks. Those are win the war in Iraq statements. A tactic, bull call spread, iron condor, covered call, buying puts. Those are tactics, folks. Tactics support a strategy. Does that make sense? Everybody ditch, hey, I love this option strategy called a calendar. No, you don't. You like a tactic called a calendar. Okay, at the end of the day, folks, trading's a form of combat. Somebody's going to win and somebody's going to lose, and hanging out here at Topkin Options, you're going to be on the right side of that trade. Now here's where I need you to write this stuff down. I'm going to give you the 7-step trade plan, and then we're going to look at a trade on Apple, maybe, or the S&P 500, and a hedge trade on SDS, okay? So, 7-step trade plan. First thing you need to develop is that strategic mindset. After that, I'll go through these, so just write them down as I go, and then I'll dig into them, and then we'll look at real trades, okay? And again, for those of you who are sitting here going, hey, Wiz, when do we get to the fireworks factory, man? Show me the Apple trade. You're not going to work out at Topkin Options. I actually turn customers away, folks, because if you have that tactical of a mindset that you just want to trade right now, we're not going to work well together. And it's my marketing department hates when I talk like this, but I really don't care. First of all, it's my company, it's my squadron, and we want the right people. Okay, so just write this stuff down, and I promise we'll get to a trade because this is all going to make sense. After we identify the target, now we're going to come up with our commit criteria. Okay, after commit criteria, what is the tactic that we're going to use? That covered call, that calendar spread, the butterfly, whatever it is. Then we talk about how we're going to employ that tactic. We plan this out. Then mid-course guidance. I don't drop a bomb, folks, and hope that it hits a target. I give it mid-course guidance to make sure it flies right through a window, plus or minus 2 seconds. And finally, our exit plan. I never, ever squeeze the trigger on real capital without knowing when I'm going to get out. It's that Colin Powell doctrine, right? President Bush said, General, get Iraq out of Kuwait. He said, yes, sir, I can do that. What's our exit strategy? How do I know when to declare victory and leave? You do that before you ever get into something, folks. You know when you're going to exit, okay? Step 1, our strategic mindset. You can be bullish, bearish. You can think the market's going to be volatile, like we've seen recently, and neutral. And remember, folks, neutral and volatile are completely different. Neutral is just a market that's chopping sideways. Volatile is what we've been seeing lately. Triple digit up, triple digit down. Okay, this is the big one. Actually, no, it isn't. It's a buying opportunity. Market's going back up. That's volatile. You can have variations of them. I'll show you a trade that I sent out this week in our full throttle program because I'm cautiously bullish right now. I got one eye towards the exit, but you can't keep this market down based on what the Fed's doing, period. And we're going to review some of the bad macroeconomic data that came out, but why we still have to be bullish. It sucks. I call it bizarro market. Real quick, we're in bizarro market right now, and I'm going to tell you why in a couple minutes, but if you hear me use the term bizarro market, good news is good news. The jobs report yesterday, good news, right? Yay. So the market goes up. Bad news lately is good news. And awful news is great news. So think about that for a second. The more awful the news, the more disinclined the Fed will be to raise interest rates. When interest rates are high, stocks will die. When interest rates are low, stocks will grow. Okay? All right, step 2, after we have our strategic mindset, now we can identify the target. What am I going to target if I'm cautiously bullish? We're going to take a look at a stock, an ETF, or an index. Those are your targets, okay? After we identify our target, now we come up with our commit criteria. It's literally, why am I committing capital to this trade? Why am I pulling money out of my pocket, hard-earned money out of my pocket, and putting it on the table at risk? Why are you in this trade? You need to have 3 to 5 sentences. I call it your cocktail party pitch. If I bumped into you in a cocktail party and you said, Wiz, I'm in this Apple trade, I'm going to go, why? If you don't have 3 to 5 sentences other than, I like Apple and I think it goes up, you're wrong. You need to be able to rattle off 3 to 5 sentences that I call the cocktail party pitch. I'm willing to commit capital to this trade for these reasons. Boom, 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 boom. Now, ladies and gentlemen, anytime your commit criteria changes during the life of the trade, you need to get out. You need to adjust or eject, period. If your commit criteria changes, this is where the discipline at Top Gun Options is going to come in. If my commit criteria to me in the F-18 means there's 7 Su-35 Chinese aircraft 50 miles away from me, but they're just kind of drilling holes in the sky. They're not pointing at me and they're not a threat. Okay, so I'm just kind of drilling holes in the sky too with my 3 other F-18s on my wing. All of a sudden the AWACS tells me those 7 MiGs are now pointing at you, Wiz, and they're accelerating. Guess what? That hits my commit criteria. It is time for me to commit my nose downrange after them. Okay? Step 4, now we identify the tactic. Again, folks, it's not a strategy, and we're going to pick the tactics today based on our strategic mindset and our commit criteria. Okay? It's simply the trade, and again, it's not a strategy. Now, for the sake of time, I am not going to drill down into this because I can't. When you sign up and join us here at Top Gun Options, you're going to know this like the back of your hand. But this thing right here, folks, it looks like an eye chart at the DMV. It will save your rear end. I'll go through it real quick. Take a screenshot or whatever you need to do. I could actually give you a free copy of this. I'll show you where you can get a free copy. I'll do that. Exactly, Mike. It's a heat map of risk. You bet, man. So, on the vertical axis on the left here, and for those of you who didn't think we'd get into geometry today, you're sadly mistaken. On the vertical axis over here is what we call, when you talk about risk, there's 2 things that come with risk: the severity and the probability. Okay, so on the vertical axis, you see the Roman numerals 1, 2, 3, 4, severe loss of capital, significant loss of capital, minor loss, and minimal loss. Okay? 1, 2, 3, 4. Severe, significant, minor, or minimal. What I want you to do is put a number in there. A severe loss of capital to you might be $5,000. To somebody else next to you on this webinar, it might be 50. Somebody might be $1 million. For somebody, it might be $100. Put a number in each one of those 1, 2, 3, 4 boxes. Okay? Now across the top, the x-axis, is probability. When you talk about risk and something going wrong, it's either likely, it's probable, it may, or it's unlikely. So, and again, I have a video on this and a manual and everything to give you. This is the quick and dirty, folks. You can now quantify risk, can't you? You know what? It's likely during the life of this trade that X, Y, and Z happens, and if that happens, I'm going to lose a lot of money. That, ladies and gentlemen, is a 1. And this is my own risk matrix here. This is how I color mine. A 1 to me is red. And if I'm at the point in my trading throughout the year where I don't want to be trading red trades, I don't. You know what, Wiz? This could go on during the life of this trade, and if it does, I could lose a lot of money. It's a 1. I'm not going to do it. Great. If you stick in the 2s and 3s, nice. Nice risk to reward ratio, right? And obviously, if you stick in the 4s and 5s, you're going to live long and prosper, but you're also probably not going to make as much money. Obviously, it's risk versus reward, and we can talk about that over a beer. I just wanted to show you that we have this. I'll teach you how to use it. So at a cocktail party, if I bump into you and you say you are in that Apple trade, I'm going to go, what's your risk? You're going to, it's a 3. I'm going to go, awesome. This is the first time in your trading career, I guarantee you, that you can quantify risk. Put a number in the vertical axis, and you can use this. All right, enough. That's where we do our risk management in the trade, all right? But step 5 is tactical employment. How are we going to get into the trade? here's the individual legs, here's the details on the trade, here's the range I'm going to try and get filled at. I never come in at the bid or the offer, period. I go mid-market and then move around from there. So I give my traders a range from mid-market that I'm going to try and get filled on. If it's a $1.25 credit, I'm going to look to get filled plus or minus 10 cents maybe, and I'll put that in my trade. Okay. Step 6 is that mid-course guidance. Here's how we're going to manage this trade. Here's where I ask what if, meaning what could go wrong in this trade that we can talk about right now, and when are we going to adjust this trade. Okay. At Top Gun Options, I'm going to show you that we have what we call trading SOP, standard operating procedures. For example, I'm going to show you in a couple minutes, I don't want to risk more than $5,000 on any one trade. Why? That's my SOP. I don't want to risk more than 5% of my model portfolio, and the model portfolios are based on $100,000. So that's $5,000. Got it. You're going to have to come up with your own. You know what, Wiz? I don't want to risk more than 2.5%. I don't want to risk more than 10. I don't want to risk more than 50. Whatever it is, stick with it. We're also going to come up with when we adjust this trade. I'm going to show you if I'm taking in a credit when, if the hair on the back of my neck starts standing up like, you know what, this trade's starting to go against me, I'm going to have a defined level, a price point, where I make a decision. I'm either going to adjust it or what I call eject, right? If it hits a certain point, I'm out. No ifs, ands, or buts. There's no emotion involved. I pull the ejection handle. It is time to give the jet back to the taxpayers at that point. I got 2 fire lights on. I got smoke in the cockpit. That's not the moment to say, you know what, I'm going to win an air medal and save this airplane. That's how you get killed. Step 7, before we get into a trade, we identify where we're going to exit. If we hit our profit objective, for example, 90%, if I sold a credit spread and I bring in and it hits a 90, I usually exit at 80, but if it hits 90% minimum, done. I don't know how many people have said, you know what, Wiz, you know, I've made 90% in this credit spread so far. It's got a week to expire, and there's like $500 left in it. I'm just going to let it expire worthless, and they don't look at it for another week. And they turn a 90% winning trade into a 100% losing trade, and I guarantee you, out of the hundreds of traders on here, I'm getting a couple vertical head nods like, yep, that happened to me. So for all those times that it worked out, where you did, quote, let it expire worthless for a couple extra $100, that doesn't equal the massive time that you're going to get shot down and lose 5, 10 grand. It sucks. Don't do it. When you hit your profit target or your max allowable loss, get out of the way. Period. Okay? This Canadian F-18 pilot was at 200 feet practicing for an air show, and he was doing a slow speed maneuver. He had a compressor stall on his left engine, and as soon as the jet rolled over, he ejected. If he had waited a half a second more, he would have ejected straight into the ground, and they would have even found his boots. But he made this decision before he went flying that if this happens, boom, you're gone, you're out. And he lived to fight another day. How many of you have ejected straight into the ground when it's too late? I'm going to teach you here at Top Gun Options not to do that. Okay, so let's get airborne. I'll take your questions and stuff at the end because I'm seeing a lot of good stuff zipping around here, and that puts a smile on my face that you guys are engaged. But for the sake of time, guys, I'm going to give you a very, very quick and dirty strategic view. Greece is a clown car, folks. Every other day you hear potential good news. Greek Prime Minister says he'll do what's required. Then you hear, you know, Greek Finance Minister says, EU, you can stuff it. Back and forth. We kicked this can down the road 2 months ago. Remember, we got to a breaking point, and then they said, we'll give you a 4-month extension. And here that can has landed, and everybody's looking around like, okay, now what do we do? I do not think there will be a Grexit. I think they will figure out something and make it happen. But it does not mean that we're not going to see an increase in volatility around a potential default. Okay, so we have got to be hedged for that. China, kind of a hard landing. We know their GDP is slowing down. They know they have massive debt issues. Folks, we have absolutely crushed in one of our portfolios. In 4 months, we've made $20,000 on trades in FXI. Write that one down. If you haven't been following China, you definitely want to get into one of our model portfolios because we are absolutely crushing it, and I think it's getting ready to take off even higher. let me just, this is the weekly options and urgent alert model portfolio that you're going to get access to. But take a look at FXI real quick. FXI. If you haven't been following this for the past, just take a look at this chart. Now, look at that. Last week they opened 3 million brokerage accounts. Okay, it is absolutely crazy in China. It's consolidating here. That's a rip your face off rally, but it's holding here, and I think China goes higher. It's pulled back recently. Here's a big pullback on, saying that you can sell stock short, and also a bunch of brokerage firms in China announced higher margin policies. So the market went freak mode a little bit, and then it bounced. So I'll hook you up with what's going on in China, because we're averaging $4,000 to $5,000 a month in our China trades. We'll talk Brazil and everything else in another live trading session. I'm very bullish on Brazil. Wiz, it sounds like that country's going out of business. Yeah, it does. But again, the market only cares when it cares. The Olympics are coming up, folks. We printed money based on some World Cup trades. Even though the infrastructure in Brazil sucks, the Petrobras scandal that's going all the way up to the president, I get it, that things are ugly there. But at the end of the day, you got to trade the market you see, not the market you want. If you want Brazil to go down, it most likely should, based on the macroeconomic data. It's not, based on the Olympics. So that's what's going on down south. But I want to spend a little time operational, because we got to get some trades on, because time is getting short. Look at the non-farm payroll from yesterday, 223,000. And this was a surprise, guys. Here's why it was a surprise. Wednesday, ADP came out. ADP is its own independent employment number, right? It always comes out the Wednesday before the government numbers. They were forecasting 199,000, just shy of 200. We got 169, so that was a miss. Okay, that was a significant miss. So the market expected a miss on Friday. What did we get? The government numbers were 228 forecast. We got 223. That's a little miss, but not a miss that everybody thought. So rip your face off rally, right? Good news is good news. Did anybody, let me ask you this question. You guys answer me, because I want to sip some of my coffee. Was this a good jobs number or a bad jobs number? Feb revised upward. Rick, who else? Anna, bad. Kaylee says okay. Michael, good. RG, bad. Val, bad. Good off the chart. Eddie, taken with the unemployment rate equals good. Michael, NA, depends. Okay, good for markets, John. And Linda, bad. Shalini, okay, good according to your definitions. Aha! Who said that? The last Michael nailed it. Good, nice job with that last Michael. It was good based on my definition for the markets, absolutely. Again, you need to trade the tape you have, not the one you want. Because it was a bad jobs report, folks. Macroeconomically, it was bad, and Brock, you nailed it, bizarro market. Look at average hourly earnings. Folks, I don't care how many jobs we produce. If we're not making money in them, it's bad. So, of course, the Wall Street Journal and, Comedy Central, CNBC was touting, the unemployment rate is at the lowest level in almost 7 years. The unemployment level is at its lowest rate in 7 years. Why? I don't know why. Somebody help me out. You guys help me out. Why is the unemployment rate at the lowest level in almost 7 years? For a good reason or a bad reason? Why is the unemployment rate at the lowest level in 7 years? Anna, yep. Eddie, Val, yep. You guys thank you. Good for you guys, man. We got a smart group here, Reed. Here's one of the number one reasons. You ready for this? Americans not in the labor force rise to a record 93,194,000 folks. Holy crap. The lowest since, hello, Jimmy Carter and Jimmy Carter 2 that we're under, 1977. I have 2 underachieving nieces and nephews. One graduated from Harvard, one is a Yale graduate. My sister, big underachiever. Look at that. They're struggling to find work. And Rick, you nailed it. It's you 3. U3, and Bob, you nailed it. They don't count non-workers. And you guys, whoever said it's U3, U6 is the real unemployment number, folks, and it's double digits. And look at this. Not that I'm against waiters and bartenders, because I'll be bumping into a waiter and a bartender tonight, most likely. In April, there were 26 waiters and bartenders for every manufacturing job. Folks, you don't get an economy airborne by hiring waiters and bartenders and not anybody who makes anything. Again, not slamming anybody. You get my point here. And then you ready for this? Here's what really brings a tear to my eye as an American. Part-time jobs soared by 437,000. Full-time jobs tumble. Stay firmly under pre-recession highs. Somebody give me Rosa, are you reading my notes? Rosa already beat me to it. Somebody give me 2 words or 1 word. Why? And Rosa already did it. Obamacare, folks. You bet, Rick. You guys are getting it. This is bad, folks. I don't care what side of the aisle you on. This is bad. Our economy is horrible. No, it's not, Wiz. The economy's humming right along here. Look at the S&P 500. Folks, I have an old chart. I don't have it in front of me because I didn't pull up my notes. This is nothing more than quantitative easing. This is nothing more than a Fed-supported market. Eddie, I see an uptrend, market interest rates low. That makes me money on the market. Thanks. Anything else? I do not care. Eddie, you're right. But here's the deal. Ross, but the useful idiots like it, the uninformed voters. Here's the deal, and Eddie, I don't disagree, man. We have been printing money. This portfolio that you're going to get access to today, guys, is up 21 grand. If you'll allow me, I'll round down 21.5 on about 36,000 in risk. This is a what 59% return in this portfolio year to date. Anybody else pulling down 59% return? I got to tell you, folks, as long as they're playing music, I'm going to dance. But the key is to have an ejection seat. And one of the things that we need to have is an ejection seat in this market, period, okay? And this is one way to have an ejection seat, okay? And this, I'm going to throw it out to you because I know there's a presenter after me, just like the insiders at the White House. I agree with you, Anna. If I run out of time, what trade do you guys want me to cover first? I think you need an ejection seat in this market, a trade that would make money if this market goes down. Or do you want to see a bullish trade on Apple? Because Apple's its own stock market, guys. Which one do you guys want to see? This isn't a democracy. It's going to be a benevolent dictatorship, but I'll throw it open to all the peeps here. Rosa, both. Rosa, if you sign up, I am going to give you both. Apple, ejection seat, Apple. I got a lot of boths, but unfortunately, I'm limited on time here. Ejection seat, crap. Let me try and give you as much for your money as you can, even though this is free. The ejection seat would be SDS, but let me start with that. Wow, a lot of ejection seats. You know what? Let me start with the ejection seat, guys, because this week was a perfect example. Look at this. See this pop in the market? I put on an ejection seat trade Tuesday in our primary live trade brief, and it made about $1,500 in 2 days when the Fed chief laid on the market here. But this is called SDS, guys. Sierra Delta Sierra. Okay? This is the ProShares Ultra Short S&P 500. Okay? ProShares Ultra Short S&P 500, meaning that this goes down as the market goes up. And if the market goes up, this goes down. So let me just show you. The purple line here is the S&P 500. The S&P 500 goes up a little over 2.5, 3. This goes down 6. This goes up. It's an inverse ETF, okay? Does that make sense? Rick, I hope I can afford you. You are good. I appreciate that, Rick. So we have to fly inverted with this trade, meaning if market goes, as you can see, this trade was down 2.7% yesterday. Why? Because the market had a rip your face off rally. I sold into yesterday's rally. Let me just, crap, I didn't get filled on it. Hold on. I sold a weekly options. We're not trading weekly options here. That's a different one of my portfolios. I was selling a bear call spread out the next Friday. This pop is way overdone. I sold at 21.30, 21.35, or I tried to. So I'm a little bearish here. So this is another reason why we're going to put on this ejection seat trade. It looks like the SDS has found its resting heart rate down here around, I don't know, 20 bucks, a little over 20. So I want to put on a trade that if the market goes down, because each one of these green arrows here or green pops here, guys, is the market going down. Hopefully all right, Wiz, I got it. This thing goes up as the market goes down. Get going. I'm going to pick an expiration, and I use Options House. I helped build Options House when I was up in Chicago, so I have an affinity for it, but you can trade with whoever. So I'm going to pick June. I'm going to go out to June expiration, and here's why. And here's a Wall Streetism that you should be used to. Sell in May and go away. Sell in May and go away. Anybody hear that? Yep. Exactly. So, exactly. All right. So here's what we're going to do. I'm going to put on a trade, and Reed, do me a favor and let me know if, like, when I have 5 minutes left. But I, at a minimum, when I get this trade on, I'm going to click on New Spread, and this trade, many of you have never seen before. But it's not like, oh crap, here comes a complicated options trade. It's not even close. Okay, it is a very, very easy trade. It's called a bullish double vertical. Okay. Here's the trade. It's simply two vertical spreads on top of each other with the same strategic mindset. Okay? A bull put spread and a bull call spread. And the reason it's called a double vertical is what? It's just two vertical spreads on top of each other. I'm bullish on SDS, meaning I'm bearish on the market. Okay? So I'm going to sell. I'm probably going to do, let me throw 150 contracts in here. Okay? Why 150? I'll show you in about 1 minute. Okay, let me go mid-market, add edit legs. Okay, I'm going to sell 150 of the normal June expiration 20 puts. That's me saying I don't think SDS is going to be below 20 by June expiration. Okay, now if I'm wrong, Janet Yellen says she's never raising interest rates ever, and the market has a rip your face off rally, SDS is going to go down. So I'm going to buy these June 19 puts. We're long below 19 on SDS. That's where our bleeding would stop in this trade. So we're hedged to the downside. This, ladies and gentlemen, is called a credit spread. It's a bull put spread, but it's also called a credit spread, so I'm taking in some money. Since I really, really, really want an ejection seat, I'm going to take some of this credit from this credit spread and buy a bull call spread. Folks, I'm cheap. I want somebody else to pay for this bull call spread. They just did with that bull put spread. I'm going to buy the June 21 calls and sell the 22s. And look at this, guys. It is a credit. Wiz, let me get this straight. Somebody just came in your kitchen and is paying you to have insurance in your portfolio. Somebody just paid your USAA bill until June, your home, car, and life. Yep. Folks, we have a car, a home, and an investment portfolio as Americans. And as Americans, we only insure 2 out of those 3, don't we? Matter of fact, the government makes us have car insurance. We all have home insurance. How many of you have portfolio insurance? I'm going to click Create Order, and I'm going to go mid-market. Okay, 27 cents. I'm going to click preview, and before I click preview, I want your eyes to go to one place and one place only. You ready? Look at the sad face. Don't look anywhere else. Please. Whoops. I'm supposed to click Analyze right there. Sad face. Now we got to do 75 contracts. That's too much risk. Sorry, folks. 75. 150 contracts is double the risk that I normally do, so we're not doing 150 contracts. I priced this the other day, and 150 would have been okay, but that's before. Okay, create order, 27 cents. And guys, in my trades, I take a screenshot of this. I explain all of this. So if I'm losing any of you, boom, look at this. The first place that professional traders look is max potential loss. we never look at the happy face ever first. We always want to know how much we can lose on a potential trade, and it's $5,500. That is about $500 north of what I want to risk. $5,000, obviously. So I'm okay with that. I'm the pilot in command of this portfolio. Max potential profit is $9,500. We're risking 55 to potentially make 95. But look, they're both kind of lower probability. What's more realistic? The break even, guys. The potential of making any scratch on this trade is 64%. And the break even is all the way down at 1973. So what, 56, however many cents under where we are right now. So here's how this trade works. Market rolls over. 2 weeks from now, Greece says, you know what, EU, suck it. We're not paying you guys back at all. And the market implodes. This blue line, which is SDS, is going to go up. So as the market goes down, this trade's going to make money. Theoretically, if we get a pop above 22, we make $9,500. Now, a lot of the longs in my portfolio are going to get kicked in the gut, but that's why they're called longs. I have some trades out to January of 2017. So I don't mind if they get kicked in the gut short term, because in the front month, June, July, August, I'm going to have my ejection seat. This is a nice risk to reward ratio, 1 to 1.74. Isn't that nice? There are a ton of different ways to manage this trade, guys. And Reed gave me the 5-minute heads up here, so it sucks. But there are a bunch of different ways to manage this trade. The bull put spread is called a credit spread, right? It loves theta. It loves time decay. So if we got a pop in SDS because the market rolled back, maybe I sell I close the I close the bull call spread because that's a debit spread and it doesn't like theta. So if I'm seeing some profits in the bull call spread, maybe I close that, like the guy in the song said, go on, take the money and run, and let the bull put spread ride. Or if the market pulls back and we get a pop in SDS, maybe I take off, 50 contracts. Take some profit, take some money off the table with 50 contracts, and leave 25 on as some insurance in case the world goes to hell in a handbasket. Does that make sense? Also, placing this trade, and I'd put this in the trade alert, folks, is you might leg into this trade. We might have to put the bull put spread on by itself, and then the bull call spread, or it doesn't matter what order. I'd put 2 of these trades. You can either try and get filled on this as one trade with 4 legs, or put the 2 spreads on separately. Bull put and bull call. Does that make sense? Okay. I would look to adjust this trade if it went down to about 20. If I lost about $2,500, I'd probably and I'd send out an alert, roll these strikes down. I manage this trade in my portfolio, guys. So I would tell you learn what I'd be doing. But since this is one thing you have to understand about me at Top Gun Options, folks, I don't sit in my kitchen every month and write a check to USAA and go, damn, I am losing money on my insurance. That doesn't happen. Some of you might feel that way, like, oh, this sucks. But I guarantee you, when you get rear-ended by somebody without insurance or your house burns, my house got broken into like 4 years ago, folks. Sucked. Cleaned out after a charity event. Go figure. Yeah, no good deed is left unpunished. I had a charity event at my house and whatever. Meaning, some of you are asking, well, Wiz, where would you adjust? Probably about $2,500, but know that if this trade hit its max loss, that means the market had a rip-your-face-off rally, man, and all my other longs crushed it. That's what I'm talking about, guys. When yesterday, you should have had a red in your portfolio, and this should have been your red. Does that make sense? It's the cost of doing business. This is how I'm going to teach you about discipline and managing risk, is to have an ejection seat in your portfolio. If it, quote, loses some money, be happy because all your other, this helps you sleep at night. It helps me sleep at night. I know short term, if the market pulls back, I'm going to make a nice little scratch. Let's say if the SDS popped above 21 recently, there's maybe $5,000. So you have the potential to make money as the market pulls back. Now, guys, unfortunately, I am limited for time here, so I was going to show you a bullish double vertical on Apple. Maybe I can just show you the trade that I have on real quick. And this one is up. I put it last week, folks. I put this trade on last week. It's up 130%. $870. I put it on Tuesday, and it's already up. This is I did a bullish double vertical on Apple. Let me just show you real quick. You're getting another free trade. I can't step through it because of time. It's the 125, 120 bull put spread and the 130, 135. If Apple is above 135 by June expiration, which I think it's going to have, this trade makes $8,200. And there's a 64% probability of at least breaking even. I mean, Apple's got to implode below 124.57. It ain't. After earnings, Apple tends to do a little profit taking, consolidate, and then rip your face off rally. I've been trading it since it was an acorn, folks. So this trade, we closed one of these recently that made about 10 grand, a bullish double vertical. It was sweet, but unfortunately, here's what you need to do. You need to join our joint alert service. Okay, let me just brief you on it real quick. Eddie, do I prefer SDS over VIX? Let me get to the end, and then if I have time, I'll answer that question. If not, I got to press. Okay, so but that's a great question, folks. Here's the joint alert service. Okay, I'm going to give you 2 trades a week. Me and my volatility arbitrage trader, Doug Robertson. Okay. You're going to get a trade a week from us for an entire year. Here's where I need you to go is topgunoptions.com/alerts. And if Reed can hook me up and throw that in the chat box, I'd be appreciated. Topgunoptions.com/alerts, okay? It's $195 a month. Or you could do an annual subscription. If you do the math, that's a hell of a cost savings. And I did the math for you. That's a 60% cost savings if you did the annual subscription. Okay, so $195 a month, and the advanced trade alerts. You obviously didn't get to meet my buddy Doug Robertson. He's our advanced trader. He does a lot of earnings trades, man. He's kind of an egghead. He trades implied versus historical. Very, very smart dude. He ran a $500 million portfolio up in Chicago at a firm down the street from me. You didn't get to meet him today, but I vouch for him. If you liked anything that I had to say today, you're going to love him because I will say that he's a hell of a better trader than me and very, very smart. So you'll get one of his trades. You'll get one of my trades every week. Like I said, there's Doug. Not an egghead because of his picture, but an egghead because he's a quant, a vol arb guy, and I say that with all love. Very, very smart dude, and he runs a fund down here in South Florida as well right now, and I'm honored to have him as my wingman. So, folks, this service is perfect for you. If you don't have the time to do our live trading sessions, here at Top Gun Options, I just got done a full week of what we call full throttle. I opened up all my services for a week, and our specialty here is live trading. 4 days a week, you can log in and trade live with us and look over our shoulders and eavesdrop. That's where most of our folks start. But since Top Gun Options is new to a lot of you, you can get Airborne in our alert service, and then if you want to trade live with us, maybe you can shoot us an email. You know what? And we just got done, like I said, our full throttle program. If you're interested in the live trading, it's a lot. It's a $19.95 for a full year, so it's not. Maybe you just do this $195 a month to dip your toe in the water and make sure we're not complete clowns, and then we can get you in to the live trading services. So if you're interested in the live trading services, shoot us an email, support@topgunoptions.com, or you can just try the alert service. Okay. And just to show you what that page looks like, and I'll throw it back to Reed. And again, Reed, thanks for all you did today, man. I appreciate your flexibility. He's a good dude, and he's a very good guy for hooking you guys up with this. So here's the page. You can go to topgunoptions.com/alerts. It's $195 a month, or in the small print here, if you want to do the annual option and save 58%, I said 60, sorry, I was off by 2%. You can click that right here and do the annual for a significant discount there, okay? If you are, though, folks, interested in the full throttle program, you can go to topgunoptions.com/full-throttle, okay? And I'll leave it at that. That's all we do here at Top Gun Options. Live trading and the urgent alert service that I just briefed you on. This is the kitchen sink, folks, and we're actually this number is wrong. I'm about to send out another email. I think we have about 15 slots left, but I understand if this is way over your head because you can see what you can get on that page. But if you really want to get Airborne, folks, topgunoptions.com/alerts, and I'd love to talk to you. This is what I do in a live trading session, folks. I just conducted this session as I do my live trading throughout the week. You can log in, listen to me. watch me manage the trades in the model portfolio, get text alerts every time I update a trade, and it's awesome. Hopefully you can tell I'm very passionate about what I do here at Top Gun Options, and give us a shot. I know you're seeing a lot of great stuff today. The I didn't write the gentleman's name in front of me, but I was like, wow, that guy's that's some pretty cool stuff too. So I know this is a lot to take in one day, but Reed does a great job of bringing some of the best in the industry, and I'm glad I was able to be a part.